Alrighty, good morning, everybody. It is Thursday, March 31st, 2022, finishing out the last day of the month. This is also the last day of the first quarter of the year. So let's go ahead and just get right into it. Yesterday, we didn't trade because it was a really tight, choppy range out of the open there. Our expectation was a push to test and push through the all-time high. Well, the all-time high. Push through yesterday's high because we didn't really have a very strong bearish case from where we found the rejection. Again, really interesting to note that the day before that, the low of the day was our orange power level to the tick, and then we pushed up and made the high of the day at our eye level at 46.31 to the tick, pulled back, and then yesterday the first expectation was really to test the close of the day before, which was this 21 quarter level. But we ultimately expected the push to test that 31 and continue to chug. Of course, anything's possible, so we had plenty of levels below. So what ended up happening was we came right up to 21 quarter here. We peeked through it and then sold off, and we came into our first expected support zone, which was 45.98 to 4600. Not necessarily holding it to the tick or anything, but held it here and kind of chopped around. And then the low of the day was 2 ticks above our next expected support area. In fact, we kind of said it was going to be 45.74 to 45.77 as the next expected support area once we broke through that 4600 region. So we did come right into our next expected support level. Again, the major eye level at 74, up into that swing we've been talking about for a long time at 45.77. So we did come right into our next expected support zone and pop out of there. However, we weren't trading then, right? So when we were here trading in the morning, it was just this sideways chop. So I told everybody to basically keep your hands off of the market. The idea was a target to the close of the day before on the previous daily high, but that was up to you if you wanted to trade that. So let's take a look here. We came down again, held our expected support level, and now here we are in the overnight session finding support. It's kind of funny, we drew in this level yesterday at 90 quarter as an expected support level. I think we came down into it. We did get a bounce out. In fact, it came in, broke it by a tick, and bounced 4 points. But today, this is an irrelevant level. However, if you look at the fib leg from the low of the day before up to the high we made here in the overnight session, it actually lines up with the 61.8 retracement of this leg. So I don't mind leaving it on there for now because it does kind of show us pretty much right where that 61.8 retracement of this whole leg is. So I'll go ahead and leave that on there for now. Just keep in mind, once we break through that, that is an indication we're going to come down to test 45.78. And well, there's a potential we could come down to test 78 and maybe come right back into this 74 to 77 area. So let's go ahead and get into our typical top-down analysis. I'm going to jump up here. There's probably nothing new going on these higher time frames, but we'll just go ahead and quickly jump through here. Quarterly hasn't changed. Monthly, again, we mentioned that we finally broke through the previous monthly high, which was that 45.78.75, and we are continuing to chug on higher here. So we've got the break of the previous monthly high, and then on the weekly chart, I did mention that we could make an argument for a bearish divergence off the current high. But what we need to see is a confluence with the daily, with the 4 hour, maybe even with the monthly on the other side of the weekly before I actually put any weight on what I'm seeing here. So for now, it's something I'm watching, but it's not something I would act on. So we got to keep in mind there's a potential for a bearish divergence on the weekly. And like I said, if the daily and the 4 hour start to really show agreement, maybe that's when we'll see a little bit of a pullback. But until that happens, I'm not going to pay much attention to that. So let's get down into our daily chart here. Really strong candle that we were talking about the day before yesterday. And then yesterday's candle, as you can see, we never really were able to break out of the previous daily range, right? So we traded within that push up to 46.31, and now coming into this morning, you can see that we're now trading within the previous daily range. So it seems to be kind of getting tighter in here, right? Higher lows, lower highs at the moment. Remember that the current daily candle has plenty of time to develop here. So, well, and there's actually one thing I want to mention back on the monthly. This will close today, right? So we'll come back and look at this on Friday. But if it closes the way it looks right now, there's really nothing that the divergence is telling me. So let me go back down. I just wanted to mention, I forgot, this is going to close at the end of today. So let's go back to the daily here. Plenty of time for that to develop. So who knows? This could pop all the way out. This could sell off. Can't really say anything about the current candle. What else can we say over here on the daily before we go down into the intraday time frames? To be honest with you, I don't see any signs of exhaustion in the push. So just like yesterday, we did expect a push to come up and test 46.31 here and potentially continue pushing. This morning, it's the same thing. We don't really see a nice clear bearish signal outside of the potential weekly thing that's going on. We don't see it on the monthly. We don't see it down on the daily. And on the 4 hour, we also did not see any type of convincing bearish signal off of the high from 2 days ago. So my expectation is that we're going to continue to come back up. Again, it could be a scenario where the market pushes back up to test 46.31, whether that's a push right in front of it, a push to the tick, or a push a little bit past it. That could be a possibility, and then it fails from there. And typically, if that happens, what we'll see is, especially on the 4 hour here, we'll see a nice push up right back up into that 46.31 area and a very clear bearish divergence. And that's when we'll see that's where we will expect some type of pullback. Because if you look back to all these pullbacks here in throughout this push, they all lead with a 4 hour bearish divergence. So until that happens, I do expect that test or a continued push higher. I think that's all I have to say. On the 4 hour here, we have the larger structure zones that are delineated by these boxes you see. And again, we said, was it yesterday or the day before, we came up to the top of this box. I think the officially was 34 or something, but we came to 31, which was again our eye level up here to the tick, right into 46.31 there. And now we're failing. So coming back down, look at what happened when we pulled back yesterday. We pulled back right into where the two structure zones meet each other, right? So we had this one box here from about 45.20 up to about 45.75-ish, right in there. And then the next box right around 45.78, going all the way up to, again, 46.34-ish. So right in between those two boxes, which is our zone 45.74 to 45.77, is right where the market came down and bounced out of yesterday. So again, these structure zones are extremely relevant. So this morning, breaking down through that low of yesterday opens us up for this new structure box down below, the low being right around 45.20. If the bulls do end up holding here and continue to push, you can see that we'll come up and we'll get up to 31, 34, and then there's kind of an open pocket here until we get up to the next major structure zone, which starts right around 46.58. And remember, on our eye levels on here, if we look and we get up above current market price, there's 46.58. So 46.58 is the beginning of that next major structure zone. And remember, 46.42 would be in between, and then there's our 46.31 that we hit to the tick a few days ago. So that's what we have above us. Down below us, like I said, if the market does end up breaking through that 74 to 77 area, then we're pushing down into that next new structure box. So let's go ahead and see what levels we're going to be dealing with if the market does end up breaking through the bottom end of that structure box, which is our major eye level here at 45.74. Um, there are a few zones that I went ahead and mapped out here this morning. So these are basically the zones that I'm going to be targeting to the downside. So if the bears continue to keep the market below our orange power level and below 50% of the previous day, that magenta line, and they can get through the previous daily low, that struck the top of that structure zone there, we have a couple levels down below here that I want to emphasize. The first one being a test of this 45.65 to 45.66 pocket right here. This little area to me would be that first expected support zone if we get through the previous daily low. If that breaks, I think that opens us up for a nice push all the way down to 45.4850 into 45.46 for that little 2.5 point pocket there. And then a little bit further, if that doesn't hold, I think we're down right into 45.40. And this is a little bit of a larger range here. Let's see if I can pull this out and show you what we're dealing with here. There's some major resistance right around 45.39 and 45.40 here. And if we zoom all the way back and we go all the way back to, where is it? This major swing here, this was 45.36. And so there's kind of a little pocket in here. Might be closer to that 40 level because this might be more relevant now that this is closer to current market price, but we can't discount that 36 level. So I've got a 4-point range in there. And then if that breaks, I think it's a nice straight shot down to 45.13 to 45.16 in here. And this should actually be, give me 1 second. Let's just make this like 10 p.m. All right, so 13 to 16. Now there are other levels in between the zones that you see highlighted. Those are other potential levels that make sense to hold, but I'm looking at the larger pockets that make sense. So remember, you can't discount that there's a 45.55.50 level right there, and then down here there we have a 45.27 level. But these pockets at the top and the bottom end to me are a little bit more relevant. You never know though if one of these minor levels in between could hold. A little bit past 45.13 is going to bring us down into this pocket here between 44.96.75 and this swing high at 44.98.50 for a little 2-point pocket in there. And then if that doesn't hold and the bears continue to sell things off, I'll be targeting right down into 44.81 and this pocket between 44.74 and 44.77. So that's what we're looking at coming into the open this morning. Again, holding below 50% of the previous day, holding below the orange power level, getting below the previous daily low is going to open us up for all the pockets I just mentioned below us here. Remember, we don't know what the market's going to do. All we know are the levels where it makes sense for the market to hold. So that's how I trade. I trade to and from these areas. And then if I do get in on a scalp, a lot of times I'm looking for my larger runner to be going towards one of these areas. I don't think there's really much else to say here this morning. I'm still, pretty strong on my argument that we don't really have a lot of bearish clues from that 46.31 high, so I do expect either a test or a continuation higher. And that's the one thing I didn't mention. If the bulls do start to break things out here and we get through 46.31, we do have to go back up and consider what's up top here. And basically, it's all the same stuff that we talked about, I think, for the last 2 or 3 days, because we still haven't gotten up through a lot of these zones that we talked about. So if the bulls get up through, remember 42.50, 46, 42.50, always potential to push up into there. But the larger structure zone is going to start up at 46.58, so that would be a larger target for me. And then if that breaks, remember, we've been talking about 4,700 up here for quite a while. So that 4,700 area, give or take a few, is going to be another target to the upside for me. And let me again update this so we at least have the box all the way across. So somewhere in there, and I know it's a much larger range. And if you zoom out, maybe we can see there's major resistance here. So we come up right into 46.95, 46.97, 98-ish, and we've rejected from this level so many times. So, in this instance, coming right back up into here, wouldn't be surprising to see that fail. Of course, the problem is it's a little bit wide. I might even want to tighten this up. So we'd say 4,700 even, down into 46.90. What is that swing there? Yeah, I guess 90. So 90 to 4,700. It's a 10-point range, just is what it is. Okay. And sorry, let me get back up there. So we have that range somewhere around 4,700. Keep in mind 46.8475 is in the way. And it wouldn't be surprising again to see some type of rejection from there either. So we have 58 up into 84. If 84 breaks, I'll be looking around that 95 area, give or take a few on either side. And then if they end up busting through that little cluster right there, it's all the way back to this 47.30 area and 47.42. So that's what we're targeting here this morning. Again, anything's possible in the market. You could have all the clues for one thing, and within a minute or two, everything changes. So be nimble out there. Be ready to flow with whatever the market is doing. And keep in mind that these are the major targets that we mentioned this morning. I think are going to give you the most high probability targets and entries. So enjoy. Have a great day. Have a great weekend. And we'll be back here on Monday to do our higher time frame analysis, see if anything has changed since last Monday. So have a great weekend. I will see you guys then.